Hey, Tyler, let's talk about what's going on with U.S. Steel.
Jason, do you like soap operas? Because the steel industry feels like it's becoming a bit of a soap opera in North America.
I will admit to watching a lot of Days of Our Lives in the summer with my grandmother as a child, but I think you're right. That certainly happened with U.S. Steel because it's not just what's going on with activist investors right now, but we look at everything that's played out with the company really over like the past 15 years.
There was a lot of twists and turns along the way, so let's get into it.
Yeah, let's do it. Let's get into some of the recent twists, how they affect investors, and what you should think about the stock right now. I'm Jason Hall. This is Investing Unscripted. This video is sponsored by The Motley Fool. We're going to talk about a bit of a mess of a stock right now and the opportunities and risks there. If you're looking for even more great investing ideas, go to fool.com/unscripted. Check out our special link and you can get access to the Motley Fool's 10 best stocks to buy right now. Tyler, I do think that sometimes a chart is worth 1,000 words. Over the past year and a half, a little over maybe a year or so ago, that we got the announcement that Nippon Steel, the large Japanese steel maker, had reached an agreement to acquire U.S. Steel. And it came out of a period where really the U.S. steel market kind of bounced back. Demand was strong. The free trade environment had improved largely because of a lot of tariffs that had been put against international steel producers for dumping steel into the U.S. market. Look, over the past 5 years, we see it's been a big winner of that. The stock at one point generated more than 5x returns before really steadily bleeding off a lot of value over the past year since the Nippon Steel deal has played out. But Tyler, if we look over the past decade, I want to stress this. This is a stock that has not generated a lot of value. 5.3% in annualized total returns over that period. Over that same period, the S&P 500 has generated probably closer to 14 or 15% in total returns. So massive opportunity cost and an underperformance against just buying an S&P 500 index fund. Let's circle back around to what's really just happened over the past few days. The stock is down a little bit, not down a lot, but there is certainly some boardroom drama going on.
The boardroom drama is basically been an activist investor that has come in and is wanting U.S. Steel to say, guys, look, drop the Nippon Steel merger. It's probably not going to happen. You're going to waste everyone's time and investor money pursuing the litigation for what may probably just end up being an adverse decision anyways. As I think we mentioned a little while ago, former President Biden blocked this deal. I think towards the end of his administration, President Trump has, at least through words, not through any actions yet, said that he agrees with opposing the deal to sell a U.S. manufacturer to a Japanese company. So there's been a lot of kind of back and forth. Both Nippon Steel and U.S. Steel have sued in court to say that they can't block this. We're going to go through this. It kind of all the boardroom drama associated with this. I should also mention too that the reason the Nippon Steel bid on the company was because U.S. Steel put itself up for sale.
Yeah,
And
right.
other companies did put in bids. Cleveland Cliffs, notably, was the one who actually, before U.S. Steel decided to put them up for sale, they made an unsolicited offer to U.S. Steel saying, we'll buy you for X. And when the number looked pretty good, at first, U.S. Steel said, no, we can't do that. And then everyone's like, well, why can't you? And so they decided, let's put ourselves up for sale and do a strategic review. And they got a Nippon Steel deal, considerably higher price than what Cleveland Cliffs was going to pay. And that's part of the reason why U.S. Steel has been so adamant to try to get the deal done, because it would have been a substantial benefit for its shareholders.
So the drama has extended beyond the boardroom. It's also gone to the shop room floor too, because we know that the labor union U.S. Steel employees operate under as members supported the Cleveland Cliffs acquisition, where it has been far less favorable to Nippon Steel being the acquirer, so much so that we've heard from management and the board at U.S. Steel pointing a lot of fingers at the union for attempting to bust up this transaction because they wanted one that would be more favorable with a company where they feel like there would be better labor relations. There's a lot of drama everywhere. Again, where we stand today, you said it. There's one thing that we found that former President Biden and current President Donald Trump could agree on is that neither thought it was in the security interests of the United States for U.S. Steel to be owned by a foreign steel producer. And like you said, an adverse decision seems highly probable at this point. We have Ancora Holdings, the activist investor that you mentioned that's moved in, trying to push the CEO out, trying to get U.S. Steel to drop the deal with Nippon Steel and to move on and to move forward. What are your expectations and how do you think investors should be viewing US Steel and maybe other stocks in the steel industry?
Well, if not to make it a little bit more confusing, the activist investor group is also wants to nominate a new CEO, and that CEO just recently sold a steel company to Cleveland Cliffs. So everyone's just kind of intertwined in that soap opera-y sort of way.
A
Also,
steel company
there,
with assets that formerly were part of US Steel, if we want to
yes,
add on to it here.
yeah, it's very wild. It almost telenovela level now, not just soap opera-y. So kind of interesting in that regard. Also, there's rumors that Cleveland Cliffs and Nucor are working on a joint bid, which would Nucor would take some of the assets that are related to what Nucor does well, which is electric arc furnaces. These are the newer facilities, and U.S. Steel had just recently built one. And
These are essentially furnaces that handle mostly recycled scrap steel
yep,
versus the large blast furnaces that Cleveland
make
Cliffs
virgin steel.
operates because of its acquisition of, I believe, AK Steel, and
And
are the
ArcelorMittal. It's
and
yeah,
ArcelorMittal, right? And also are the kind of the core operations for US Steel's business over the past century.
yeah. So again, a lot of moving parts of the steel, much more than we're normally used to, at least because this is typically a pretty boring industry. So how do we digest all of this? Number one, as your charts that we talked about at the beginning, this is a very cyclical industry to start. And over the past 15, 20 years, US Steel has not exactly been the best performer. Its returns on capital have been pretty subpar. Management has probably made a lot of missteps. They have probably, in my opinion, focused a little too much on growth plans or capacity expansion or something like that, rather than the blocking and tackling of like keeping lean operations, trying to find ways to squeeze out profitability, especially in an industry that tends to go through cycles.
Tyler, that's been compounded because of the nature of its core business with the blast furnaces, where you tend to have higher fixed costs. You can be extremely
Yep.
profitable during the peak of demand with blast furnaces, but when the cycle turns, and typically when it turns, it does turn pretty quickly to weaker demand. It's a lot harder to reduce those costs. You can't flex your costs down. Those fixed costs are simply higher. So it's compounded the impact on US Steel, while competitors like Nucor that you mentioned and Steel Dynamics, which is one of the smaller players, which has been one of the few real like true growth stories in the steel industry, have been able to take advantage of growth because of the electric arc furnaces that they use have a far more variable cost structure, and it gives them the ability to ramp up and down. They're not as profitable at the peaks, but their ability to ramp costs down more quickly means they're not as likely to take a bath in the quarters that follow a strong market.
Again, going back to United States, I don't know if anybody should be too excited about owning US Steel today. Like I said, maybe the company will become a little more focused if activist investor does get its way. Maybe there's an if, but if statements are always an extra degree of difficulty for anything. If it doesn't, sounds like they're just going to fight this in litigation and could get stuck in litigation limbo for a long time, which isn't exactly the most focused idea for a business in general. And then, like I said, this is, as you mentioned, there are other ways to invest in the steel industry. Nucor, Steel Dynamics have been long-term winners in this industry because they found a different way to do it, that it's more capital efficient, tends to be more flexible and adaptive to the ups and downs of the steel cycle. Companies that have done a great job of working down the value chain of not just making like raw steel anymore, but also making components and fabricating a little bit to increase their margins and control their destiny a little bit more. So if people are perking up their ears about interest in this industry because of the soap opera-esque part of it and be like, oh, there must be money here because people are talking about it, maybe not in the way that the story is currently being presented.
Yeah, I think that's right. The cycle has been very favorable for the steel industry over the past 4 or 5 years, particularly with the structural benefits of, and we saw this frankly, the tail end of the Obama administration through the Trump's first administration, and then accelerated a little bit with the Biden administration, and likely that the Trump administration is going to continue to really aggressively pursue tariffs to limit foreign producers' ability to dump steel into U.S. markets at costs that frankly are challenging for American producers to make any money at. So I think that's probably likely to continue, but it's going to remain a really cyclical industry, and the cycle could turn really, really quickly. So I think you're right. I think investors should be mindful about looking for the historical winners and not trying to catch what looks like quick or easy money on a company like US Steel, where frankly, I think there's still as much downside as there is upside beyond the acquisition, right? If no acquisition comes together, the stock is set to head even further down from here. And I think investors should be really mindful of that risk. If you're looking to profit from the steel industry, my first pick, probably Steel Dynamics with Nucor a 1A, but I don't think the timing of the cycle right now is really that appealing. I think you're better to wait. This is the kind of business you wait for a downturn and you buy them and ride the profit on the way up through the cycle versus trying to think about this as a stock that you can just buy anytime. Valuation really matters, Tyler, when you're thinking about the steel stocks.